Associated British Foods. Ticker symbol is ABF. It's on the London Stock Exchange and the company is based in London. At the moment it's trading for about £13.17 per share. Pays a dividend twice per year, and the last one I received was for 20 pence per share. So I think I haven't held them long enough to receive two, but what usually happens when a company pays twice a year is that they call them an interim and a final payment. So the interim is the halfway payment, and it's usually a lot less than the final payment. So if there is big variation in the dividends that you receive from a semi-annual paying company, that is quite normal. So going down through their products, if you live in Ireland or if you live anywhere in the UK, you will probably recognize a lot of these. But I know that most of you that live in either Ireland or the UK will recognize Penneys and Primark, which are actually owned by Associated British Foods. So it's not all food. They've got 5 segments in their company, which are ingredients, agriculture, sugar, retail, and grocery. And they sell their products in 53 countries so far. So this is quite a popular dividend stock. Now, although it's not ideal that it only pays twice a year, it is very popular among dividend investors. It's one of these companies that has what's called a moat of products. So one company selling one product is completely dependent on that one product to do good, for the company to do good. But if they have what's called a moat, which is a diversified range of products, it means that if, say, their Big Ben pies for Associated British Foods weren't selling very well, they have many other products that can kind of pick up the slack and keep things rolling for the company. There's quite a few brands here that I'd recognize. Unfortunately, like a lot of stocks in the UK at the moment, it's not doing particularly well because they've had a bit of a nightmare of a couple of years. They've had lockdowns, as we all had. They also had Brexit. They've had a prime minister who left in disgrace, and the new one that has come in is apparently not very popular. But that's not really my place to say. I don't know anything about politics, so I'm not going to pretend to. But people are generally very unhappy, and I've been hearing quite a lot about the UK being in massive debt at the moment, so things are really not looking good for a lot of UK stocks. So this graph here is just Trading 212's data, and this goes back to 2013. But if we look at the long-term graph of ABF, it paints a much different picture. So it's coming down off what looks like about 10 years of pretty high prices. 2012 to now, it's actually going back down to where it was in 2012. So it's wiping out 10 years of unrealized gains for people, unfortunately. It's always nasty to see. So as of the recording of this video, it's £13.16 per share. And as I said before, pays twice per year. They have about 127,000 employees. And it's in the retail or apparel industry, although, as I said, it has 5 sections, which are mainly food, but also retail. So it's a UK-based, diversified international food, ingredients and retail company. And the 53 countries that it operates in include Europe, Africa, the Americas, Asia and Australia. The grocery segment is engaged in manufacturing of grocery products, which, as you can see here, there's a wide range. The sugar segment, it's pretty self-explanatory. It's engaged in growing and processing of sugar beet and sugar cane. The agricultural segment is engaged in manufacturing of animal feed and the provision of other products for the agriculture sector. The ingredients segment, as you've probably guessed, is ingredients, which include for baking, for enzymes, lipids, yeast extracts, and cereal specialties. And the retail segment, which involves Penneys and Primark, which are very popular. If you live outside of Ireland or the UK, you may not have heard of them, but they're essentially cheap clothing and apparel stores. You can get a full outfit in either one of these stores for the same price as a shirt in most places. Very popular. When things opened back up after lockdown, there was queues down the road and around the corner. At the moment, ABF has a market cap of £10.5 billion, has a PE ratio of 18.44, a current revenue of £13.88 billion, a positive earnings per share of 70 pence, and a dividend yield of 2.59%. Over the last year, they do have profits, but slightly positive, 3.4%. And over the last quarter is about 6%. Their debt to assets ratio over the last year is 41%, which is pretty good. And over the last quarter is about the same, 41.5%. Their annual cash flow from operating is £1.41 billion. from investing is negative £561 million, and from financing is negative £512 million. So this graph goes back to 1988, but Associated British Foods was actually founded in 1935, so it's not really the full picture, but it paints a pretty, I would say, good outlook. You know, if I was invested up here and fallen down to where it is now, I'd be singing a very different song at the moment, but it's falling back down to where it was in 2012, and I'd say there's still quite a bit more to fall. But it is one of these companies that it's not really a get rich quick kind of thing. Like the dividend yield is quite low and it only pays twice a year, but it is a very well established, very large company with a lot of products, and the products are quite popular. And when situations like the current one come along and the company is falling under hard times, they can just raise their prices because people need to eat. So it's good for the company, but unfortunately it's quite shit for the customer. But it kind of puts them in a unique position where they can shield themselves against the bad times a little bit better than some other companies. So the 52-week high of ABF is £21.81, and the 52-week low is £12.88. So it's creeping very close to the cheapest it's been in a year. In the investor section of Associated British Foods website, they have a pretty clean dividend history, and it appears to be paying, well, recently paying in January and July of every year. And as I said in the beginning, there's often quite a variation between the interim and the final payments. But overall, it's looking quite good. It's raising, although slightly. It is raising, but as times get hard, it is a good business decision for companies to reduce, if not suspend, their dividend payments. But overall, it does look quite promising. And that's about it for the basic rundown of Associated British Foods. It is quite popular, and it's by no means a get-rich-quick kind of stock, but it's safe, it's a large company, they have a large moat of products. However, I don't think that things are going to be growing over the next, I'd say, couple of years. Minimum 1 or 2 years. Yeah, the future outlook for a lot of countries is not looking great. In my own opinion, I think that regardless of what the economy or the market is doing, you should always be investing, not saving your money in a bank. I think you should be investing it, and the key to it is to find good companies at fair prices, as Warren Buffett said, not fair companies at great prices. But that's about it for this one, and I hope that you found this useful.